Hello traders, hope you are having a good weekend. So we just came out of a very profitable trading week. Okay, we came out with 280 pips in profit and 53 points from our NZDUSD trade. Okay, so this week has been quite tricky because we had ECB, which I warned you about last week, or rather in the last market outlook trading video. I gave you a warning about the kind of market conditions that we will face. But fortunately, I think the market was pretty cleaner. Rather, the movement was clean. It wasn't too whippy. Okay, there were pretty there were some traps. Okay, there were some traps here and there, but on balance the movements were quite clean, meaning that the moment you buy, price actually just goes in your direction rather than just up down and goes nowhere. Okay, so I hope you caught some good moves. So we want to put this week behind us. Okay, it's a good week, but we need to prepare for the next week. Okay, because if we don't prepare for the next week, then we cannot repeat this performance. And trading, it's really a long-term thing. It's something that you need to keep analyzing the market. You need to keep coming back, and you need to be consistent if you want to do this kind of results every single week. Okay, granted, we do not make money every single week, but we do our best to send signals that actually make money. So if this is the first time you're joining us, right, you are a YouTube subscriber, or you are checking out our channel for the first time, please join us in the Telegram channel. Okay, I'll leave a link to that in the description down below. Okay, if you are from the Telegram channel, right, please join us, right, please subscribe to the channel and check out all the other videos that I've previously uploaded, because I share a lot of insights on how to trade the market on this channel. Now, with that being said, what I like to do in this market outlook video is I want to give you the key biases and the key levels that you should be focusing on. Okay, now as a disclaimer, this is meant for the day chart, and I'll be using the MPE trading strategy, which I actually covered in the MPE day trading guide, which I have for you right over here. Okay, so this PDF guide, it's totally free. Okay, and you can grab it through the link in the description down below. It will take you to a page like this. Okay, just click this and input an email, and we'll send it to your email address. Okay, so just a very quick refresher. MPE stands for market condition, price level, and entry trigger. Okay, so I'll be using these 3 steps to analyze this currency pairs here shortly. Okay, so I will show you what I'm looking at so that you can trade on your own if you do not want to use our signals. Now, as always, the first thing that I always like to do is I always like to run you through the Forex Factory Economic Calendar, because this sets the tone for the week and it tells us what kind of trading week is it going to be. So if you've been watching this channel for some time, you will understand that I always talk about conferences and how I hate conferences. And true enough, next week we have another conference, unfortunately. Okay, I don't like it, but it is what it is. So right here, it's the calendar for next week, from the 26th of July to the 30th of July. And right here, you can see that on Thursday, we have the FOMC press conference. So it's another press conference, and I hate it. Okay, so please expect the market to be very whippy. Don't expect the market to trend nicely. Okay, so you have to be very patient, right? The best setups will probably be found after this FOMC event. Now, I don't know where you are based in. Okay, personally, I'm based in GMT +8, and right now it's 10:22. But for you, you have to change this Forex Factory Economic Calendar to your time zone so that you know what time the FOMC press conference is, and you just be patient and wait for the market to show its hand after the conference. Okay, so from Monday to Thursday, the market is probably not going to be very committed. So if you're going to take short-term trade, please be very careful, right? Please exit quickly, right? Please protect your profits if you have any. Okay, so that's just a very quick run through of next week. Now let's go into the charts. Now right here I have DXY, which I always like to start with, because DXY gives us the direction of the USD. Okay, and a lot of these currency pairs, or rather FX majors, are pegged against the USD. For example, Euro dollar, Pound dollar, Aussie dollar, Kiwi dollar, these are currency pairs that are against the dollar, and so dollar is very important to understand. If we know the direction of dollar, then we know the direction of these currency pairs. So right here's DXY. So let's go step by step. Okay, remember I have the day trading guide right here, market condition, price level, and entry trigger. Now, of course, I may not be able to show you the entry trigger because we have to see the market, whether we have a nice candlestick pattern, but I can definitely show you the market condition and the price level that you should be focusing on. Okay, so that's my goal for this market outlook trading video. Now, right here, the market condition is bullish. Okay, it's very clearly bullish because we have a high here, low, higher low, higher low. Okay, and if you were to draw a ascending trend line here, this was actually the market outlook video that I did last week. Okay, or rather, this was the same analysis that I did last week. So I said that, okay, price is a little high, expect it to retrace, and true enough, it did retrace here. Okay, but it didn't really touch the trend line, but the idea is there, it's almost right to the trend line. So in this case, right, the analysis was still correct, and right now price seems to be rebounding higher. So I would say that price has the potential to go higher. Okay, so perhaps next week we will be looking at a strength in dollar. Okay, meaning that euro dollar will go short, pound dollar will go short, we go long dollar franc, we go short Aussie dollar, we go short Kiwi dollar. So that's the implication when it comes to studying the dollar chart. Okay, normally I do not recommend trading straight in the DXY because personally I do not do that. But if you want to do it, you can do it as well. Okay, so of course right now price is bouncing off support, and the next level that I see is 93.31. Okay, so there's quite some space here, so I do expect dollar to appreciate moving forward. Okay, moving into next week. Okay, of course we have to see FOMC, but that's my prediction before the market even opens and before the news event. Now moving on to euro dollar. Euro dollar, it's in a bearish market condition. Okay, because we have a low here, we have a high here, we have a lower low, lower high, lower low. Okay, so market condition is bearish. So the next thing that we need is we need a good price level to sell. Okay, so if you want to sell, you either trade the breakout or you trade the bounce of a resistance. Okay, so you either trade the break of a support or you trade the bounce of a resistance. Now, if we were to zoom in, you can see that this was actually support. Okay, if you can't see this level, just switch to the line chart and you can see this level clearly. Okay, this is one of the tricks that I like to use. I recommend that you do this if you cannot see the price action clearly. Okay, for me, my eyes are pretty trained, but if you are not trained, your eyes are not yet trained, this is something that you can do. Now, price on Thursday, this is Friday, this is Thursday. On Thursday, price actually closed below it, and on Friday, you can see that price tried to go back up, but it failed. Okay, so this just means that this support is broken. Okay, so potentially next week we could be looking at selling euro dollar. Okay, this is in alignment with the DXY trade, or rather the DXY analysis that I just went through with you, because if DXY is strengthening, then euro dollar should be dropping. So I could potentially look for an opportunity, something like this. Okay, maybe something like this. Just a moment, just adjust this. Okay, something like this, and just target the next support level, which is right here. Okay, it's not difficult to find because this is the recent swing low. Okay, so you can see that the risk to reward is still pretty good, 1:1.85, and you're trading with the trend. Okay, so this is a good setup. I recommend that you stick to this. Okay, this is the kind of trades that you should be trading if you're a beginner or you're still struggling. Okay, I've already mentioned this in the day trading guide, which is if the market is in a downtrend, then you should be looking to sell only. Okay, don't be a hero and try to buy in a downtrend. That's not the smartest thing to do. So that's it for euro dollar. Let's move on to pound dollar. Okay, so pound dollar, just a little bit of adjustment. Okay, let me just go through the market condition first. Now, market condition is still bearish because we have the low here, we have the high, we have the lower low, lower high, and lower low. So this trend is not broken, so we should still be looking to sell only. Okay, at least on the daily time frame. Now, previously I drew the level as something like that, taking into consideration this swing low. Okay, but you can see that on Thursday, this candle actually closed higher, so that made me adjust the candle to this level, or sorry, not candle, move the resistance level to this level because of this swing low right here. Okay, so I think it's a very important thing to note is that sometimes you might get the levels a bit wrong and you have to make adjustments. Okay, it's fine to make adjustments when the market moves, and that is why I create this market outlook trading video for you every single week on a weekend, right? I sacrifice my weekend so that you guys know the right key levels to focus on. Okay, because it's not so simple like, like the levels are always the same. Okay, the levels sometimes change, like as the market moves, it gives us the right levels that we should be focusing on. So that's what I do in this video, right? So I hope you appreciate it, right? I hope you will give this video a like if you haven't already done so, right? Please subscribe also if you haven't already subscribed to the channel. Now, back to my point that this is bearish and this is resistance. Okay, right now price is at resistance, but if you were to look at this bar right here on Friday, okay, this is what is known as an inside bar. And an inside bar is not very conclusive. It's not a bearish signal. So for this reason, I won't be too eager to go short straight away because I'm not convinced that this bar right here is very bearish. Okay, so ideally, I would like to see the candle close below the low of this bar. Okay, meaning that on Monday, if we can get a close below here, then that would confirm that this is a strong resistance level. Now, one thing to note is that by the time price close below this level, it could be somewhere here, okay, and that's very close to support already. So it's not a very good trade setup because if let's say you are shorting somewhere here, okay, and let's say your just stop loss is just something like that, and you're shorting into support, you can see that your risk to reward is terrible. Okay, so this is not a good setup that I recommend because the levels are very close to each other. Okay, you can see right here that this was previous support, and here as well, here was a swing high, down here supported. So I would really see this as an entire zone of support, and you shouldn't be selling into support. Okay, so for this reason, I don't recommend that you trade pound dollar. Okay, I recommend that you stick to euro dollar because the risk to reward is probably going to make more sense. Okay, so just bear in mind that support is very close, and this candle right here is not confirmed. Okay, in the day trading guide, I did say that a good candlestick pattern would be a engulfing pattern or a shooting star or a hammer. This is an inside bar. Okay, so please be patient, right? Do not just start shorting because you see an inside bar right here. Now moving on to dollar franc. Dollar franc, my analysis for last week is still holding true. Okay, so nothing much to update about this one. Last week I said that I believe this is more bearish because we have this chart structure. We have this left shoulder, head, and the right shoulder. Okay, so what this is an head and shoulders pattern. It's a reversal pattern. Okay, and true enough, this level here, I actually pointed out this level even before price came up here. So even when price was here, I already mapped out for you to say that this is resistance, and true enough, this resistance is holding. Now, right here we have a very nice like shooting star right here. Okay, but the problem is that when the candle close, it's in the middle of the support and the resistance. Okay, so right now we are in what I call the no man's zone. Okay, it's nowhere, it's in the middle of support and resistance, and if you chase this trade, then like the pound dollar trade, you are setting yourself up for a very big or rather poor risk to reward if you do something like this. Okay, you can see that your risk to reward is not good again. Okay, so this is something that I don't recommend you trade. Okay, I recommend that you just sit this out. Okay, if you really want to trade this, then wait for price to break up above, okay, this entire zone of resistance, and then come back down. Or if not, if you want to trade the bearish side, then you wait for this support to be broken first. Okay, and then just look for a retracement up, look for a candlestick pattern here, and then you take the short down. Okay, but in this range bound market, I don't recommend that you trade. Okay, especially if you are not experienced and you do not yet know how to trade the lower time frame. Okay, it's very important. I do not want you to chase after the market and get whipped out because you are buying in the middle of the range. Now moving on to Aussie dollar. Aussie dollar market condition is bearish as well. Okay, because we have a low here, we have a high, lower low, lower high, lower low, lower high, lower low. Okay, so market condition is bearish. In fact, we can actually also draw a trend line, something like that. Okay, this candle high barely touched, but the idea is still the same. Now, Price seems to be resisted by this level, but personally I do not see this level as very strong, because this level is in the middle of nowhere. And if perhaps you scroll back, you can see that, let me just plot it out first. You can see that perhaps maybe there was some form of resistance here, turn support, but personally I prefer to use this level, okay, because of the recency effect. Now this is one of the things that I learned and I didn't actually share on this channel before. It's called the recency effect. Now, one thing to note is that recent price data will always have more significance compared to old price data right here. So if I have to choose between a price level that happened right here and a price level that happened recently, then I will place more emphasis on this, okay? So this is the recency price effect that I personally follow, okay? I like to rely on recent price action rather than scroll back all the way and not know if that level is still valid, okay? So hopefully you understand, and that is why I believe that price should still retrace higher, and you have this confluence together with this descending trend line, then look for a trade setup higher. That could be a good trade setup, okay? Previously I mentioned that this was support. Again, I mapped out last market outlook trading video. You can go back to that video and check out this portion. I did say that this was support because this was the high, and this was the low, and true enough, price broke below, okay? It's kind of like a fake out, okay? It's a bearish fake out, and then it closed back up, okay? So this support is still valid. If we were to short here, we get a nice candlestick pattern here. Just make sure to take some profits when price comes back down to this level, which is 0.73369, okay? So I hope you got that. Let's move on to Kiwi dollar. Now Kiwi dollar, the market condition is also bearish, okay? Most dollar pairs like euro dollar, pound dollar, Aussie dollar, these are all bearish, okay, because they generally trade in the same direction. So this one, you can see that there is a low here, there's a high, lower low, lower high, lower low. So market condition is bearish. However, there is a very strong support right here at 0.6930, which is being very stubborn, okay, it refused to be broken. Right here it refused to be broken, here again, and right here it did a fake break, okay? So let me just run you through what happened right here, okay? It actually happened this week. So price actually closed below this entire zone of support. However, if you were to look at this candle here and there and plot out this low, okay, let me just plot it for you. This low right here in, let me just change the color so it's clearer, okay, in yellow, okay, this low, you can see that this candle didn't actually close below this candle, okay? So this was actually a trap, okay? It's a bearish trap that lured in a lot of short sellers or people who were bearish on this and went short, okay? So people who shorted here actually lost money because price just went back up. Now, this level is still very strong, and meanwhile, the market condition is bearish, and we have this descending trend line, which I expect to act as resistance. However, if you were to wait for a candlestick pattern right here, I do believe that by the time the candlestick pattern comes and there's confirmation, it's probably going to be somewhere here, and it's very close into support yet again, okay? So it's very difficult to trade because you're not having much room for price to move in your direction, okay? If you short it a bit, and then you get right smack into support. So for this reason, I don't recommend that you trade Kiwi dollar next week until you see that this entire zone is broken, okay? It's very important that you see this entire zone, okay, that I just drew, that this entire zone is broken first, then you go short, okay? Because if you short here, what might happen is that price might do something like this, it just go down, then it goes up, then it goes down and goes up, and so on and so forth, and you get impatient, and then you exit with a loss, or you exit at break even, okay? So I don't recommend that you trade this. I recommend that you wait for this entire zone to be broken first, okay? Stick to the easier pairs like euro dollar, which I've just shown you earlier on, okay? Now moving on to dollar CAD. Dollar CAD market condition is very clear. It's bullish because we have a high here, we have a low, higher high, higher low, higher high. This low right here is not violated yet, okay? I know it's a little scary to see this candle and this candle being bearish, okay? You do not know whether you should still buy or should you sell, right? Remember, we always follow the market structure. So if the market structure is bullish, then we stick to longs. If the market structure is bearish, then we stick to shorts. So in this case, there's no reason to panic. We should still be looking to buy. Now, last week I did mention that this level right here, it's resistance. Over here, okay, it's not difficult to get this level. Okay, I think I did mention this level. I can't really recall. But anyway, this level right here is strong. You can see one look, you can see that right here is resistance, 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 and resistance. Okay, it's not a difficult level to get. Now, price is still in the middle of nowhere. Okay, I expect price to come down a bit lower. Okay, ideally, if we can come down somewhere to here and do like a pin bar to test this entire zone of support right here, okay, this entire zone of support, and have confluence with this ascending trend line, then this to me is an A++ setup, okay, because remember, we are trading with the trend. It's bullish, you're looking to buy, you're buying with the trend, and you have market structure and you have the ascending trend line. Okay, the last thing that you need is just a price action candlestick pattern. Could be an engulfing pattern, could be a pin bar, could be a hammer. Okay, if you do not know what I just said, you do not understand, in our 3-day trading guide, we have covered this. Okay, we have the candlestick pattern cheat sheet as well, so please go grab this. Okay, it's free, so please go click on the link in the description down below if you have not already gotten your 3-day trading guide. Okay, so this is a good setup. I just do not know whether we'll get this trade set up, okay, depending on whether the market chooses to retrace back lower or not. But I do hope we get it, because this will be a good setup that you can focus on. Now, moving on to dollar yen. Dollar yen is a bit tricky. Okay, previously I did talk about this trend line, and true enough, this trend line held, okay, broken and held. Now, price came down lower, okay, and then price came back up. Okay, so this right here is looking like an inverted head and shoulders. Let me just draw it out for you. So this is the left shoulder, this is the head, and this could potentially be the right shoulder. Okay, so for this, I won't say that the market condition is flat out bullish, because you can see that we have a high here, low, lower high, lower low. Okay, so the market condition is actually bearish, but I'm seeing signs of reversal. Okay, reversal towards the upside. Okay, because there is an potential inverted head and shoulders pattern. So for this reason, I recommend going long instead, but that's only if price retraces down to this level, okay, which is this left shoulder. Okay, this level, look for a candlestick pattern, and then potentially we could buy it up. The first resistance will be this one right here, of course, which will also be the neckline of the inverted head and shoulders pattern. Now, if this level is broken, then of course we are going to revisit the swing high right here and potentially retest this broken trend line. Okay, so this is going to be a very strong level where you should definitely take your profits. Okay, now don't get me wrong, I'm not saying that you should short here. Okay, I'm just saying that if you were to buy here, then you should look to take some profits here and take some profits here. Okay, so this one is a bit more tricky. If you are still struggling, you're new, please skip this, because we are going counter trend in this case. Okay, it's bearish market condition, but there's a potential that it could go higher. Okay, so that's how I would trade it if it's up to me. Now, moving on to gold, XAUUSD. Now, gold, last week I talked about buying here, and we didn't actually get a very good candlestick pattern, okay, because price sell down, and this nasty looking doji, okay, it's not very convincing that you should be buying, because you can see that even on the close, it barely closed above the trend line. Okay, so I do not know whether you actually bought it, but personally, I don't think this is a good trade. And even if you did buy it, your risk to reward is probably quite high, because this candle right here is quite wide, so you have to put your stop loss something like this, right? Okay, let me just do it again. You have to put your stop loss below the low, and I think this is a pretty wide stop loss, so I do not know if you actually took this trade for some of you, but personally I didn't take this trade because I didn't like this candle. Okay, this is a kind of like indecision candle to me, and after that we got this candle right here, which just proved that this resistance is still valid. Okay, so right now this entire zone right here is acting as resistance. Okay, market condition is actually bearish right now. So let me show you why. Right here's the high, here's the low, here's the lower high and here's the lower low. Okay, I understand if you can't actually see it because it's a bit hard to see. So what I'll do is I will show you the line chart, which it's not that clear actually because you have a high here, low, lower high, lower low, lower high, lower low. Okay, again, if you can't see it, what you can do is you can switch to the lower time frame, for example the H4, and it should be quite clear. Okay, you have the high here, the low, lower high, lower low. Okay, so market condition is bearish and we have the resistance holding right here. Okay, so this candle right here, you can say that it's a bit like an bearish engulfing pattern. I guess it looks like a bearish engulfing pattern, but I'm not very convinced that this is a good pattern. But if this is resistance, right, and this is support, you could potentially look for a trade setup, something like this. Okay, I don't recommend that you do this because I don't really like this candlestick pattern. I would prefer to see a nicer candlestick pattern. But if you think that it's worth the risk, then you can try something like this. Okay, because even if you risk 1%, you know, if you are right, you lose, you make 1.76%. If you are wrong, you lose 1%. Okay, so the risk to reward is pretty good. It's not bad, but I just don't like this candle. Okay, ideally I would prefer for price to retrace a bit higher into this zone, give me a nicer bearish engulfing pattern, and then I'll take the shot down. Okay, this is how I prefer to trade it. One more thing to note is that this entire zone of you can see all these hairs, this lower tail. Okay, these are the hairs of the candle here, 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 and here. This indicate that this is actually a strong support itself. Okay, so if you were to sell, try to sell closer to the resistance, because if you sell lower, you're actually selling right into support. Okay, so again, my advice would be to just wait for price to retrace higher, look for a nicer candlestick pattern and short it down. Okay, I don't really recommend you know, gambling and taking the trade right here just based on this candlestick. Okay, you can if you want to, but just make sure you control your risk. Okay, now moving on to Euro Pound. Euro Pound, it seems like we almost, you know, broke out of this descending triangle which I drew for a long time, but right now it's not very clear because price broke out and then, you know, it came back down. Okay, so one thing to note is that this market condition might be bullish already. Okay, because previously we were looking at a low here, high, lower low, lower high, lower low. Okay, but look what happened with this up thrust here. This high here was violated. Okay, so we don't have a series of lower lows and lower highs anymore because this high here was violated, and more importantly, price actually closed above the level. Okay, this candle closed above this level, closed above. Okay, so this pattern right here is looking like an inverted head and shoulders pattern. You can see the left shoulder here, the head, and the right shoulder right here. Okay, so right now I'm seeing that price could potentially retrace a bit lower, form a nice candlestick pattern, and then I'll look for a buy opportunity to buy it up. Okay, there's quite a lot of space. Okay, it's counter trend in a sense because this market structure is not confirmed, but I think that from here to here is a big space. So if you can get in with a nice stop loss, perhaps, you know, a nice pin bar right here, and set in a stop loss that is not too wide, maybe something like this. Okay, and you target here, then the risk to reward is going to make sense. Okay, let me just draw it properly, something like this. Okay, something like this. Okay, you can see that the risk to reward is very lucrative. Okay, so just pay attention on Euro Pound because I do think that we probably will get a good setup next week. Okay, depending on how the market reacts to this level. Okay, we also have confluence with the ascending trend line, which I've drew by connecting this swing low with this swing low right here. Okay, so this is a good setup if we get one. Okay, this is probably going to be a A++ setup as well because we have multiple confluence and there's a lot of profit margin to be made on this particular currency pair. Now moving on to NZDUSD. Okay, NZDUSD, I don't want to talk too much because market condition is bullish. We actually went long this week, but we got out too early, perhaps because we were afraid that this resistance will hold. Okay, it kind of held a bit and then after that it broke out. Okay, so market condition is bullish. Okay, it's one direction. There's no reason why you should be shorting this. No matter how you see it, you can see that this is an entire uptrend. Okay, no matter how you see it, it's definitely in an uptrend. Now price is a little high. Okay, I don't recommend that you chase it. I recommend that you wait for price to retrace back into this zone of support. okay, rather resistance turn into support right now. Look for a candlestick pattern here and then just buy it up, okay. This is all-time high, so there's no historical level, okay. Right here there's no historical level, so I can't give you other levels to focus on. All I can say is that do not chase the market, do not buy high, wait for price to retrace back to this level and look for a buy opportunity somewhere in this zone right here, okay. Now moving on to pound yen, and that's all for this market outlook. Now pound yen market condition is still bearish, right? Don't be afraid to short it, okay. I understand that this movement up is pretty scary, but market condition is still bearish because we have a low here, high, lower low, lower high, and lower low. So there's no reason why you should be buying if you are trading the daily time frame. Now, price is resisted right now by this descending trend line. The only problem that we have is that we don't have a candlestick pattern right now, okay? So you can see that this right here, if I were to just plot this level, you can see that price is also resisted based on this swing low, this high, previous swing high right here, this swing high, and this swing high. So price is resisted at a strong level. Now the problem is that I'm a bit afraid of this level right here, okay, because this is also a strong level. So if you wait for a candlestick pattern, maybe perhaps on Monday the candle close somewhere here, okay, maybe the candle close something like this, okay, let me just draw it out, okay, maybe the candle closes something like this. By the time you get the candlestick confirmation, this is support and you sell into support, okay. So it's very important that you take note of that this is support, okay. If you want to go short, make sure that price closes below this entire area, okay, meaning this entire below this candle low here and this swing low right here, okay. You need to wait for price to close below 151.168, okay. I will repeat this because it's very important. You need to wait for price to close below 151.168, okay, because if you do not and you do something like that just because you get a nice candlestick pattern like bearish engulfing pattern right here and you go short, you might just be selling into support, and what might happen is that price might just do this, okay. So do not do that. If you want to sell, wait for this level to be broken, okay. My advice would be just wait, just be patient, wait for this level to be broken, and you can take the breakout of this level and target towards this level. Anyway, from here to here is a big space of almost 200 pips, okay, about 180 pips, I guess, okay. So there's a lot of space, so you do not have to chase the market, because between here to here is kind of like a hollow space, okay. I do expect price to move down fast. In fact, if you were to look here, price move down fast and move up fast. So I do expect that if price breaks this, it will go down very fast, so you don't have to worry about to being late to the party and forcing a trade to happen just because the candle closes here, okay. Just be patient and wait for this level to be broken, okay. So that's all I have for you in this market outlook trading video. I hope you got a ton of value, right? Next week I want to remind you that we have FOMC, so it's not going to be easy, so please, I urge you to manage your risk, okay. Please manage your risk. The only way you're going to survive trading Forex is if you manage your risk, okay. Our signals make money, but the reason why people still lose money is not because our signals don't work. It is because they mismanage their risk and they do stupid things like risking 30% of their account on one trade, okay. If you do that, it doesn't matter how profitable our trades is, you're still going to lose money, okay. Whether you follow our signals, you trade on your own, or you follow some other educator signals, you will still blow your account if you do not manage your risk. So I really hope you take that into consideration. I really hope you bear that in mind, okay, because I really do not want you to blow your account, okay. If not, thanks for watching, right? I'll catch you in the next video.